Download this code from codegive.com, link in the description below. OK, let's dive deep into the analysis and preparation of a statement of cash flows, SCF, under IFRS and ACCA standards. This will be a comprehensive guide, covering the theoretical background, practical considerations, and a code example for automating parts of the process. Table of Contents. 1. Introduction to the Statement of Cash Flows. Asterisk Purpose and Importance. Asterisk IFRS Requirements, IAS 7. Asterisk Key Definitions, Cash, Cash Equivalents. Asterisk Methods of Presentation, Direct versus Indirect. 2. Understanding the cash flow categories. Asterisk Operating Activities. Asterisk Direct Method. Asterisk Indirect Method, Detailed Explanation. Asterisk Investing Activities. Asterisk Financing Activities. 3 Steps in preparing the Statement of Cash Flows, Indirect Method. Asterisk Data Gathering and Reconciliation. Asterisk Calculating Net Income. Asterisk Adjustments to net income for non-cash items. Asterisk Analyzing changes in current assets and current liabilities. Asterisk Identifying investing and financing cash flows. Asterisk Structuring the statement. 4. Analyzing the statement of cash flows. Asterisk Liquidity analysis. Asterisk Solvency analysis. Asterisk Profitability analysis, indirectly. Asterisk Key ratios and metrics. 5 Common pitfalls and challenges. Asterisk Treatment of specific items, example interest, dividends, taxes. Asterisk Foreign currency transactions. Asterisk Acquisitions and disposals. Asterisk Non-cash transactions. 6 Illustrative example, detailed. Asterisk Sample financial statements, balance sheet, income statement. Asterisk Step-by-step SCF preparation, indirect method. 7 Code example, Python. Asterisk Automating calculations and presentation, pandas, potentially other libraries. Asterisk Data input and output. Asterisk Error handling. 8 Conclusion and further resources. 1. Introduction to the Statement of Cash Flows. Asterisk Purpose and Importance. Asterisk. The Statement of Cash Flows provides information about the cash inflows, cash coming into the company, and cash outflows, cash leaving the company, during a specific period. It answers the crucial question, where did the company's cash come from, and where did it go? This is vital for asterisk assessing liquidity, asterisk determining if a company has enough cash to meet its short-term obligations, asterisk evaluating solvency, asterisk understanding the long-term cash flow patterns to assess financial sustainability, asterisk making investment decisions, asterisk analyzing a company's ability to generate future cash flows for investors and creditors, asterisk predicting future performance, asterisk using historical cash flow data to forecast future cash flows, asterisk reconciling net income and cash flows, asterisk explaining the differences between accounting profit, net income, and actual cash generated by the company. This is critical because accrual accounting, where revenue and expenses are recognized when earned or incurred, not necessarily when cash changes hands, can distort the true cash position. Asterisk IFRS requirements, IAS 7. IAS 7, Statement of Cash Flows, is the international financial reporting standard that governs the preparation and presentation of the SCF. Key requirements include asterisk classification of cash flows, asterisk cash flows must be classified into 3 categories: operating, investing, and financing. Asterisk direct or indirect method for operating activities. Asterisk companies can choose either the direct or indirect method for reporting cash flows from operating activities. Asterisk separate disclosure. Asterisk significant non-cash transactions must be disclosed in the notes to the financial statements, example acquisition of assets through the issuance of stock. Asterisk consistency. Asterisk the chosen method, direct or indirect, must be applied consistently from period to period. Asterisk interest and dividends. Asterisk interest paid and received, and dividends paid and received, must be classified consistently from period to period as either operating, investing, or financing activities. The standard allows for flexibility, but the classification must be clearly disclosed. Taxes paid are generally classified as operating activities unless they can be specifically identified with investing or financing activities. Asterisk key definitions. Asterisk cash. Asterisk includes cash on hand and demand deposits, example checking accounts. Asterisk cash equivalents. Asterisk short-term, highly liquid investments that are readily convertible to known amounts of cash and which are subject to an insignificant risk of changes in value. Examples include treasury bills, commercial paper, and money market funds. Generally, only investments with an original maturity of 3 months or less qualify as cash equivalents. The policy for defining cash equivalents must be disclosed. Asterisk methods of presentation, direct versus indirect. Asterisk direct method. Asterisk reports the actual cash inflows and outflows from operating activities. Examples include cash received from customers, cash paid to suppliers, and cash paid to employees. It's conceptually more appealing as it directly shows the cash impact of operations, but it's often more difficult to implement because it requires detailed tracking of cash transactions. The IFRS standard encourages the use of the direct method. Asterisk indirect method. Asterisk starts with net income and adjusts it for non-cash items, changes in working capital, current assets and liabilities, and other items that affect net income but not cash flow. It reconciles net income to cash flow from operations. While less transparent, it's more commonly used in practice because the information needed to derive it is readily available from the income statement and balance sheet. 2. Understanding the cash flow categories. Asterisk operating activities. Asterisk. These activities relate to the principal revenue-generating activities of the company. They result from transactions that enter into the determination of net income. Asterisk direct method. Asterisk, less common in practice. Asterisk cash received from customers, cash receipts from sales of goods or services. Asterisk cash paid to suppliers, cash payments for inventory, materials, and services. Asterisk cash paid to employees, cash payments for salaries, wages, and benefits. Asterisk other operating cash receipts, cash receipts from royalties, fees, commissions, and other sources. Asterisk other operating cash payments for rent, utilities, insurance, and other operating expenses. Asterisk indirect method. Asterisk, more common in practice. Asterisk start with net income, or loss. Asterisk add back non-cash expenses. Asterisk depreciation and amortization. These are expenses that reduce net income but do not involve a cash outflow. Asterisk depletion, similar to depreciation, but for natural resources. Asterisk impairment losses, write-downs of asset values that reduce net income but do not involve a cash outflow. Asterisk amortization of bond discount. The amortization of bond discount increases interest expense but doesn't represent a cash outflow. Asterisk deferred tax expense. The increase in deferred tax liabilities increases tax expense but doesn't necessarily represent a current cash outflow. Conversely, A decrease in deferred tax assets increases tax expense but again doesn't necessarily involve a current cash flow. Asterisk adjust for changes in working capital asterisk. Asterisk increase in accounts receivable, means more sales were made on credit, and cash hasn't been collected yet. Subtract the increase. Asterisk decrease in accounts receivable, means more cash was collected from previous credit sales. Add the decrease. Asterisk increase in inventory, means more cash was used to purchase inventory. Subtract the increase. Asterisk decrease in inventory, means inventory was sold that was previously purchased using cash. Add the decrease. Asterisk increase in accounts payable, means more purchases were made on credit, and cash hasn't been paid yet. Add the increase. Asterisk decrease in accounts payable, means more cash was used to pay suppliers. Subtract the decrease. Asterisk increase in accrued liabilities, means more expenses have been incurred but not yet paid in cash. Add the increase. Asterisk decrease in accrued liabilities, means more cash was used to pay previously accrued expenses. Subtract the decrease. Asterisk changes in other current assets and liabilities that relate to operating activities should also be considered. Asterisk investing activities asterisk. These activities relate to the acquisition and disposal of long-term assets and other investments not included in cash equivalents. Asterisk purchase of property, plant, and equipment, PP&E cash outflow. Asterisk sale of PP&E, cash inflow. Asterisk purchase of investments in securities, example stocks, bonds cash outflow. Asterisk sale of investments in securities, cash inflow. Asterisk making loans to other entities, cash outflow. Asterisk collection of loans from other entities, cash inflow. Asterisk purchase of intangible assets, example patents, trademarks cash outflow. Asterisk sale of intangible assets, cash inflow. Asterisk financing activities asterisk. These activities relate to changes in the size and composition of the company's equity and borrowings. Asterisk proceeds from issuing stock, equity cash inflow. Asterisk repurchase of stock, treasury stock cash outflow. Asterisk proceeds from issuing bonds or other debt, cash inflow. Asterisk repayment of debt principal, cash outflow. Interest payments are generally classified as operating activities, but can be classified as financing activities, as long as the company consistently applies the same method. Asterisk payment of dividends, cash outflow. Dividends paid can be classified as operating or financing activities as long as the company consistently applies the same method. Asterisk proceeds from loans, cash inflow. 3. Steps in preparing the statement of cash flows, indirect method. Let's outline a detailed step-by-step approach using the more common indirect method. 1. Data gathering and reconciliation asterisk. Asterisk obtain the following financial statements. Asterisk income statement for the period. Asterisk balance sheet for the beginning and end of the period. Asterisk reconcile the beginning and ending cash and cash equivalents balances to the balance sheet. Asterisk gather any additional information needed to classify transactions, example details about asset sales, debt repayments, etc. 2. Calculating net income asterisk. Asterisk take the net income figure directly from the income statement. This is your starting point for the operating activities section. 3. Adjustments to net income for non-cash items asterisk. Asterisk identify and add back all non-cash expenses that reduced net income, depreciation, amortization, depletion, impairment losses, etc. Asterisk analyze and adjust for any gains or losses on the sale of assets. Gains are subtracted from net income because they increased net income without increasing cash flow from operations. Losses are added back to net income because they decreased net income without decreasing cash flow from operations. These cash flows are classified in investing activities. For analyzing changes in current assets and current liabilities asterisk. Asterisk compare the beginning and ending balances of each current asset and current liability. Asterisk apply the following rules. Asterisk increase in current asset, subtract from net income. More cash is tied up in that asset. Asterisk decrease in current asset, add to net income. Cash was freed up from that asset. Asterisk increase in current liability, add to net income. Cash hasn't been paid yet for that liability. Asterisk decrease in current liability, subtract from net income. Cash was used to pay that liability. Asterisk focus on changes in accounts receivable, inventory, accounts payable, and accrued liabilities. 5. Identifying investing and financing cash flows asterisk. Asterisk analyze the balance sheet and any supplemental information to identify all investing and financing activities. Asterisk categorize each transaction as either an inflow or an outflow. Asterisk examples. Asterisk purchase of equipment, investing outflow. Asterisk sale of land, investing inflow. Asterisk issuance of bonds, financing inflow. Asterisk repayment of loan principal, financing outflow. Asterisk payment of dividends, financing outflow. Asterisk sale of stock, financing inflow. 6. Structuring the statement asterisk. Asterisk prepare the statement in the following format. 4. Analyzing the statement of cash flows. The SCF provides valuable insights into a company's financial health. Here's how to analyze it. Asterisk liquidity analysis asterisk. Asterisk net cash flow from operating activities asterisk a positive and growing cash flow from operations is crucial. It indicates that the company is generating cash from its core business. A negative operating cash flow is a red flag, suggesting the company might be struggling to generate cash from its core operations. Asterisk current ratio and quick ratio considerations asterisk while the SCF doesn't directly calculate these, a strong operating cash flow supports a healthy current and quick ratio. Asterisk cash conversion cycle asterisk this is an approximation of how long it takes a company to convert resources into cash. It is not directly gleaned from SCF but the SCF information helps to analyze it, especially accounts receivable, accounts payable, and inventory changes. Asterisk solvency analysis asterisk. Asterisk free cash flow, FCF equals net cash flow from operating activities, capital expenditures, purchase of PP&E. A positive FCF indicates that the company has cash available after investing in its fixed assets. FCF can be used for debt repayment, dividends, or acquisitions. Asterisk debt coverage ratios asterisk the SCF can be used to calculate debt coverage ratios, such as asterisk cash flow to debt ratio asterisk net cash flow from operating activities / total debt. This indicates the company's ability to repay its debt obligations from its operating cash flows. Asterisk debt service coverage ratio asterisk, net cash flow from operating activities plus interest expense plus taxes, / principal payments plus interest payments. This measures the company's ability to cover its debt service requirements. Asterisk profitability analysis, indirectly. Asterisk relationship between net income and operating cash flow asterisk a significant difference between net income and operating cash flow might indicate aggressive accounting practices or problems with working capital management. Consistently low operating cash flow relative to net income could signal potential issues. Asterisk trends in operating cash flow margin asterisk operating cash flow / revenue. This indicates the percentage of revenue that translates into operating cash flow. Asterisk key ratios and metrics asterisk. Asterisk cash flow adequacy ratio asterisk, net cash flow from operating activities, / capital expenditures plus debt repayments plus dividends. This ratio indicates whether the company's operating cash flows are sufficient to cover its capital needs and returns to investors and creditors. Asterisk reinvestment ratio asterisk, cash paid for investments, / cash from operations. 5. Common pitfalls and challenges. Asterisk treatment of specific items asterisk. Asterisk interest paid asterisk IFRS allows interest paid to be classified as either operating or financing activities. Consistency is key, most often classified as operating activities. Asterisk interest received asterisk IFRS allows interest received to be classified as either operating or investing activities. Consistency is key, most often classified as operating activities. Asterisk dividends paid asterisk IFRS allows dividends paid to be classified as either operating or financing activities. Consistency is key, most often classified as financing activities. Asterisk dividends received asterisk IFRS allows dividends received to be classified as either operating or investing activities. Consistency is key, most often classified as operating activities. Asterisk taxes paid asterisk generally classified as operating activities unless they can be specifically attributed to investing or financing activities. Asterisk foreign currency transactions asterisk. Asterisk cash flows arising from transactions in a foreign currency should be translated into the reporting currency at the exchange rate prevailing at the date of the cash flow. A weighted average rate can be used if it approximates the actual rates. Asterisk unrealized gains and losses on foreign currency are non-cash items and should be adjusted in the operating activities section if the indirect method is used. Asterisk acquisitions and disposals asterisk. Asterisk the cash flows related to acquisitions and disposals of subsidiaries or other business units should be presented separately in the investing activities section. Asterisk the total consideration paid or received should be disclosed. Asterisk non-cash components of the transaction, example stock issuance, should be disclosed in the notes. Asterisk non-cash transactions asterisk. Asterisk significant non-cash transactions, example acquisition of assets through the issuance of stock, conversion of debt to equity, should be disclosed in the notes to the financial statements. They are not included in the body of the SCF. 6. Illustrative example, detailed. Let's create a simplified example. Sample financial statements. Income statement for year ended December 31, 2023. Item amount. Revenue $500,000. Cost of goods sold $300,000. Gross profit $200,000. Operating expenses $80,000. Depreciation expense $20,000. Interest expense $10,000. Income before taxes $90,000. Income tax expense $20,000. Net income $70,000. Balance sheet as of December 31. Item 2022-2023. Cash $20,000 $30,000. Accounts receivable $30,000 $40,000. Inventory $50,000 $60,000. Total current assets $100,000 $130,000. Property, plant, and equip. $200,000 $250,000. Accumulated depreciation, $50,000 $70,000. Total assets $250,000 $310,000. Item 2022-2023. Accounts payable $20,000 $30,000. Accrued liabilities $10,000 $15,000. Total current liabilities $30,000 $45,000. Long-term debt $50,000 $40,000. Equity $170,000 $225,000. Total liabilities and equity $250,000 $310,000. Additional information asterisk. During 2023, the company purchased equipment for $70,000. The company repaid $10,000 of long-term debt. The company issued dividends of $15,000. Step-by-step SCF preparation, indirect method. 1. Data gathering and reconciliation complete, data is provided. 2. Calculating net income $70,000, from the income statement. 3. Adjustments to net income for non-cash items depreciation, $20,000, add back. 4. Analyzing changes in current assets and current liabilities accounts receivable, increase of $10,000, subtract. Inventory, increase of $10,000, subtract. Accounts payable, increase of $10,000, add. Accrued liabilities, increase of $5,000, add. 5. Identifying investing and financing cash flows purchase of equipment, investing outflow, $70,000. Repayment of long-term debt, financing outflow, $10,000. Payment of dividends, financing outflow, $15,000. 6. Structuring the statement 7. Code example, Python. Key points about the code Pandas data frames uses Pandas data frames to store the financial statement data. This makes it easy to manipulate and access the data. Error handling the try, except block handles the case where depreciation expense is not found in the income statement. The get method is used when accessing dictionary elements from the additional _info dictionary, providing a default value if a key is missing. Robust error handling is essential in real-world applications. Flexibility the code is designed to be easily adaptable to different financial statement formats. You may need to adjust the column names and item names to match your specific data. Clarity the code is well commented to explain each step. Formatting the code prints the output in a relatively nice and easily read format. Improvements and extensions data validation add more data validation to ensure that the input data is in the correct format and that the calculations are correct. Direct method implement the direct method for calculating cash flows from operating activities. More complex scenarios add support for more complex scenarios, such as acquisitions, disposals, and foreign currency transactions. Database integration connect the code to a database to automatically import financial statement data. Reporting generate formatted reports in PDF or other formats. 8. Conclusion and further resources. The statement of cash flows is a critical financial statement that provides valuable insights into a company's financial health. Understanding the principles behind the SCF and the steps involved in its preparation is essential for ACCA candidates and finance professionals. Further resources *IFRS standards *. Access the official IFRS standards at www.ifrs.org, www.ifrs.org. *ACCA study materials * consult your ACCA study materials for detailed explanations and examples. Financial accounting textbooks * refer to reputable financial accounting textbooks for a comprehensive understanding of the subject. Investopedia * https://www.investopedia.com https://www.investopedia.com, a great source for financial definitions and explanations. This tutorial provides a strong foundation for understanding and preparing the statement of cash flows. Remember to practice with various examples and consult the relevant standards and resources to deepen your knowledge. Good luck with your ACCA exams.